What's your WEX word of the day? How do you see today shaping up?
Yeah, morning, Frank. Good to see you, man. My Wex word of the day is rational. As in, I think that with the number of unknowns we have present in the markets right now, investors seem to actually be behaving pretty rationally, right? We're not seeing any panic selling because things have gotten too quiet, and we're not seeing any irrational run up in stocks, sort of in a no news is good news type of fashion. So I feel pretty good about how investors are responding right now.
All right, so you're feeling pretty good about how investors are responding. Investors are also responding quite a bit to any commentary from the Fed. So today we get a pair of Fed speakers, I should say, speaking later today, Goolsbee and Daly. Do you think these are market-moving speeches? And what are you looking for when it comes to this? We had Neil Kashkari talking just a bit earlier this week saying, maybe, just maybe, there might be a hike on the table.
I think that's very improbable. I think the Fed chair did a good job of coming out last week and sort of putting fears over additional rate increases to bed. There's not even a possibility of rate cuts until July, right? So nothing's really going to change here. Unlikely to happen before September at best. So there's also no earnings to report for another 2 months. There's no real catalyst in the markets right now pushing beyond Fed speak. And so I just don't think that there's a lot that's going to change between now and maybe the back half of the summer. I think we're in a pretty good spot right now as long as nothing unforeseen jumps out there and grabs us.
I want to bounce something off of you, Malcolm. I got some new data from Morningstar, and it's showing in part that the correlation between large cap stocks and Treasury performance is at its highest level since 1997. How are you thinking about asset allocation in your portfolio?
Yeah, so I think it's good in the sense that equities and fixed income have started to initially started to uncouple and move in opposite directions. I think it's unfortunate that we're starting to look at a similar situation to 2022, where anything was moving and anything that was moving was all moving in the same direction. It brings that challenge to the 60-40 portfolio that we were talking about for so much during that year back into our attention. I do think it's really important for investors, though, from a long-term perspective, to recognize the disparity between fixed income and equities and expect that that relationship will stay intact long-term.
So specifically when it comes to bonds, we've heard a lot of people come on the show and say they're looking at the short end of the curve. They're looking at short-term treasuries to really try to capture that yield. Overall, I know you're saying that it's kind of changed, the landscape's changed for the 60-40 portfolio, but how are you looking at bonds? Do you want to lock in longer, or do you want to take advantage of the higher yield on the short end?
Yeah, so right now we are still taking advantage of the higher yield on the short end. For the last couple of years, we've been buying way more brokered CDs than I've ever seen before in my career. And I think that trend is going to continue at least through the remainder of this year, because we can still see something like a 5+% risk-free rate of return on those brokered CDs, similar to the 2-year Treasury. Why would we want to take the additional risk with interest rates if we know for sure that's what we can get for the next 12 months and then see what happens?
All right, I want to get to some of your picks. Interestingly enough, you didn't know this, but you're kind of with one of the themes that we're looking at today, the AI trade, whether it's kind of reached its peak or not. Your two picks today are Meta and Amazon. Give me a sense, why these two names in particular out of the Mag 7?
Yeah, so to that end, I think our love affair as investors with AI is nowhere near over. I think it's a mistake to think that AI is cooling off at this point. I do think, though, investors are starting to look for places that AI is going to show immediate profitability, not 2 or 3 years from now. But I bought those shares of Meta when it sold off following their earnings, because I think the market reacted nonsensically. I know there were concerns over Mark's plans to spend 25% or so of their annual revenue on R&D, but I think that's exactly what they should be doing. I support that plan, because what we'll find is that AI actually improves ad targeting pretty soon here, and I guarantee you advertisers are going to be willing to pay up pretty well for that additional enhanced targeting.
One other thing you like about Amazon's the ad business is something we've talked quite a bit about here on the show. So you actually think it could reach a run rate very similar to the cloud business as well?
Yeah, so we're having conversation on a regular basis about how AWS is ceding ground to Microsoft and Azure and potentially Google Cloud as well, and who knows who else comes up behind them. But what I think is being understated here is the fact that digital advertising very well could become the new AWS for Amazon, in the sense that it carries the water for the rest of the company. The margins there are so significant that they don't have to have it be their main driving force like e-commerce or even cloud today, but at a 50-ish% estimated margin, that business did something like $47 billion in 2023 alone. I have a feeling they're going to blow that out of the water this year, and that's going to really carry the business, regardless of what happens with that cloud unit and e-commerce.